been with momentum for a while. Yeah. And he's going to show you some new stuff and some old stuff alike. And I think you're going to like it. We've been doing a lot of work with the momentum lately. And so I think you'll find what he's going to share valuable and interesting and educational and usable. Yeah. Very usable and actionable. So I'll give a brief introduction for Steve, and then we'll get right to it. Number one, thanks for coming in today. And thanks for giving me the opportunity to come in and introduce Steve. I've been working with Steve for years and years now, and he's a wonderful teacher. He's got a wonderful way of explaining things in the simplest manner, and it's always refreshing. I love attending these webinars that Steve does too, just because of his way of approaching it all. But Steve is no ordinary person. He's proven to be just an exceptional trader, and we're really glad to have him on board with our team. So without any further delay, guys, here's Steve.
Hey, Rob, thanks so very much. I appreciate it. Man, I could listen to you talk about me all day long, but we'll get on with it. Good morning, good afternoon, good evening. We've got people from all over the globe, our beautiful planet. We're glad you're here. We respect your time. If you've not attended one of my sessions, one of my webinars, it's real basic, real simple. I have a few slides that I will go over with you, and then we will look at the practical application, how we do it in the room, and that's it. Dr. John Maxwell taught me many years ago, an educator takes a simple idea and makes it complicated. A teacher takes a complicated idea and makes it simple. So I try to keep this very simple. Just because we don't talk a lot about a lot of sexy sounding things doesn't mean we aren't aware of those things. We keep it real, okay? We keep it real for our traders, and that's the important thing. So let me do this and make this legal. And if you've not read that, please at some point go through that. Thank you. That's not important. I've got the setup on this is the important part, and I'm going to run through the basics pretty fast. You won't need to know a lot of that. You'll need to be aware, but it's not anything you'll need to know or remember. So I'll go through that pretty fast, and then we'll, again, look at the specific applications. I'm going to talk about one concept, two applications of that, and a couple of entries, and that's all we're going to do today. But as Rob said, it's pretty important, especially now with the ES. ES has gotten a little bit rowdy lately, and if you are struggling with what to do, would be real easy to destroy confidence, to get beat up, to get hurt, and we don't want those things to happen either to our members or to you. So anyway, this is really not that important. This is pretty cool. It turns out that competitive professional golf, from a psychological standpoint, is exactly a mirror image of trading. So without knowing it, I had it was like I had some years that I didn't have to go through and struggle with trying to come to grips with, you know, what is short-term trading? What is that all about? And so, but you need to know, hey, does this guy, you know, what's his credentials? All this says is that I work hard and I like to win. And I'll work hard, you know, we work hard for our members and we like to win. So all right, we're going to talk about the concept of trading momentum. Now, when we think of the word momentum, I think most people think of acceleration, right? Gaining momentum. And that's it's great to be in a trade and it gain momentum, right? Anybody disagree with that? I want to get in and I want it to gain momentum immediately. And I think we all do. And under normal market conditions, whatever that is, that's pretty cool. We do that in our room, and we have systems that do that, and we're going to show you how that works. But when any market, gets a little rowdy, trading from the edges seem to keep us from getting run over, for the lack of a better word, as much as we have as we would like. And to do that, sometimes we have to consider the other side of momentum, and that would be when a movement is losing momentum. Now, again, we go to traditional thought process in trading. I want to get in a trade as it gains momentum, and everybody does, and then I want to get out as it loses momentum. And that's beautiful. And we have ways that we can look into that. But again, trading from the edges, if I'm going to trade from the edge of a market, I want to know that it's run out of steam before I get involved. And Rob is the first person that I've ever seen. I've seen a lot of stuff. It's the first person that ever captured the concept of range expansion and exhausting momentum to where it was safer to consider entering the market. And I'm going to go over that. We're going to go over that in detail. Okay, so here's the key. When I explain the why to you, the how will become easy or easier. If you don't know the why, the how doesn't matter. Now, traders want to know the how without learning the why. And in my humble experience, that's why most traders struggle, is because they don't understand the nuances. Why should I do this? Why should I believe that? Once you understand that, applying it to your trading won't be that big of a deal. So I'm going to spend about 10 minutes talking about the why. We're going to talk about 10 or so minutes about the how, and we'll be through. So momentum's key concept that master traders use to conquer the markets. A highly effective momentum indicator brings clarity and confidence to our trading. Write this down, please. Cycle expansion leads, forecasts, initiates, begets. Range expansion, and that's what we're all looking for. Whether we're trading for a few ticks or a few points or big extended moves, we're looking for the market to expand from where it is to a different place in a direction that we're involved. So cycle expansion comes before range expansion. So if we can get really good at understanding cycle expansion, we can get in front of range expansion, which is what smart momentum does. And it's a really, really, really cool concept. And I can't thank Rob enough for his work with that and the lives he's changed. So in other words, market structure is directly related to and reacts to market cycles, expanding and contracting. Now, having the ability to anticipate these market adjustments before they can occur can mean the difference between success and failure. That one idea often is the difference between traders who succeed and traders who don't. So smart momentum does exactly that. It's a highly evolved oscillator that can have you on the right side of range expansion a majority of the time. And I'm going to say a brief note about smart momentum. Any momentum indicator can be falls into the category of oscillators. Now, without going into mine numbing detail. Oscillators can be bounded, or unbounded. Oscillators can be predictive in nature, although a lot are not. And that's unfortunate. But if we're using averages of past ranges, it's not very predictive. And by the time you get 2 or 3 averages involved in something, it has lost its connection with current price, and it becomes non-predictive. Now, this is the most important of all ideas to consider. Every tool that we use in our room are highly predictive of likely future events. Now, oscillators can be adaptive. Again, most aren't. And that just simply means it possesses the ability to morph in order to adapt to or adjust to current market structure, and then readjust to future market changes, which is really, it's cooler than it sounds. This allows us traders using smart momentum to have a workable solution to most any market structure we encounter. And there are sophisticated mathematical algorithms built into smart momentum, so you won't think it's just, you know, simple little something. It's highly evolved, but we don't need to know that to use it. Smart momentum is unbounded, predictive, adaptive indicator. They can be used in a multitude of ways to help traders succeed. Predictability in the markets is the only thing that matters. Not much of anything anybody ever says matters if it doesn't help us reach our trading goals. In order for this to happen, our system, strategy, market entry signal, whatever adjective you would want to plug in there, must have a certain amount of predictability built in, or it's useless. So consider this: price patterns are just human behavior, human thoughts on a chart, are predictable, and they repeat. Price patterns repeat over and over and over and over and over and over. All patterns, any pattern, every pattern can be studied to see what, if any, repetition exists within a sample, a market entry signal. And we'll talk about those in a minute. Do I have a pattern that doesn't repeat? Now, here's the key. The more precise, highly defined, demanding a price pattern market entry signal is, the greater the ability of that pattern to determine the degree of repetition and thus dependability and reliability that exists for this pattern. In other words, can a pattern, if it's very precise, predict the future? And we believe it can. Here's a real crude example. My stats professor in college said, if you want to compare two ideas, expand both to a level of ridiculous and then compare them. So we're going to use a sample size of 90%, sample success rate of 90% versus a success rate of 10%. Okay, the 90% pattern can predict the future 9 out of 10 times. That's incredible. The 10% pattern is so random that it has no benefit at all. So understand, whatever you're using for predictability and dependability must be precise, must be highly defined. And in our room, we demand extremely precise price patterns. And we've researched those and refined those for years. It's only through this precise look at price action that, that any level of success can be expected for anybody. So this is what we do for our members. Now, here's a real quick note about recording price. Most important factor in developing trade strategy is, how do indicators read current market price action? Future price movement follows, predictive in nature, order flow. Then it makes sense to have priced bars that are using order flow in their construction. See, if I've got a time bar and I've got 3 ticks in it or 300 ticks in it and it prints another one, that tells me nothing. Our Smart Super Rincos have order flow built into those. So we can have confidence in our indicators, but the price patterns we use to be successful traders. So Rob puts order flow into each bar. So not only do the price bars read order flow, but all of the indicators are predicated on the price bars. And so they're reading order flow. So then it becomes game on for us. See, this allows a very high degree of predictability that's built into the bar and then into each indicator we use. Huge advantage for secondary trading room. Specific applications. Let's look at this and we'll look at a couple of signals and then we'll wrap it up. See, when we consider an application of an idea, we want to know it all, every possible use of the information. We can maximize our potential or traders that way. So momentum trading has 2 broad applications: exhaustion of a local trend, signifying a large trend is likely to continue. We have a signal, we'll show you what that looks like, called a type 2, that's incredibly adept at reading cycles and likely extremes in the market. What does that mean? Well, if I get an indication that range expansion is likely to be down and I'm waiting on, I want a reset of price. I don't want to sell it cheap. I want to sell it expensive. So I want it to work up, not only work up, I want it to run out of steam before I get in it. Okay, that's what a type 2 does. We get an indication of range expansion. We're looking for not only a reset, but we're looking for it to run out of gas, right? Because I don't want to get in something that's still got momentum going this way. If I'm looking for an edge. The second way to trade momentum would be a continuation, and that would be this. We get a range expansion break, we get a reset, and we start rolling over, and we look for growing momentum on the other side of the break. Okay, we'll show you how we do that in our room. We expect a local trend to continue. Now we have several. We do have several market entry signals built around this, and this is a right here, right now entry approach. Trading with momentum, with trend, with order flow, with price action support, resistance. And now here's the whole key. Here's the game changer. And it changed many trading careers in our room. We use background color to help us trade with momentum, and it shifted the course of our trading forever. And we'll show you what that, a couple of charts. Okay, it's chart time already. Cool, type 2 divergence. Market structure where we have an extreme reading in smart momentum with an opposite reading. You know what I'm going to do? I'm just going to bring a chart over. You know, and I'll show you what it is. Picture's worth 1,000 words. So here's today's market. And this is not, I've actually got 2 chart setups, but I wanted to simplify looking at smart momentum. And how do we find this? How do we find this? Which, as you can see, are pretty good arrows. So what we're looking for, price is cycling up, no duh. It breaks out. Now smart momentum comes and breaks this point, creates a lower cycle reference, and price is higher. Well, we don't know that it's ready to go here. That's pretty likely. Now, some traders use the depth of smart momentum to consider. And that's a brilliant way to trade. That's a brilliant way to trade. Others would rather take more entries, and they're simply looking for a setup situation to go. Okay. So here, before the market opened, or right as the market opened, you can see we have smart momentum eclipsing this low. Okay, now we have a thing called smart breakpoints that draw these lines for you, but I wanted to teach it this way. So smart momentum is breaking this. So as long as I don't take this price point out, when I get a reversal bar, I have a type 2 entry. Now we have some filters that you may or may not want to apply to that to raise the win percentages. And I'm going to show you this exact entry in about 90 seconds. Okay, so here we are, the market opens up, we're cycling up, and then, you know, we start heading down. We'll show you how we tell that in a minute to an 85% accuracy. These were the first 3 errors that I put in that we noted have the reward to risk demand that we require in order to enter the market. That's just, we're pretty picky about what we do. And so we place them as soon as we can, and always try to be in front of it. We'll say, hey, we're in a type 2 situation, a reversal bar down gives us an entry. And you can see the market was cycling beautifully. But what happens is that we're running out of steam. We're cycling down and we're running out of steam. Cool. We're cycling down. No, although it worked. We're cycling down and running out of steam. Cool. We're cycling down and running out of steam. Cool. You know, and it just, the market does this over and over and over and over each day. Now we have a system that has a gaudy name. It's called Ultimate Trend Identification System. And the simple way to apply that is this. When we have, see, smart momentum doesn't mark every bar, just the critical ones. And smart momentum says this bar is important. So when that breaks, structure has broken. This whole downtrend has broken. All right, resistance is broken. So as long as we don't take this out, I'll make a reference. As long as we don't take this out more than we could do a 3 or 4 tick trap. As long as we don't take this out, we would be looking, those of us using smart momentum ultimate trend identification system would be looking for the market to cycle up, which it did. So now the market's cycling up. We have an entry here. We'll show you in a minute. We have a type 2 here. We have a type 2 here. Okay. We broke this down and we have type 2 here. We got 3 or 4 points off of. UTIS broke this resistance up. So ultimate trend identification system says we're going up. Okay, UTIS says we're going up. Here's the type 2. Up, 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 up. And I could do this all day long. This breaks and we go down. Okay, this breaks, type 2 here, and it goes up. And we mark this in the room. We follow this in the room. And you can see why. If you get a reversal structure here, and it goes up 12 or 15 points, isn't that something that you want to be involved in? So that's type 2. I want to find the edge. Okay, UTIS says up. I want to find an edge to get involved in. Right here's a type 2 entry. Running out of steam, and away we go. So that's it for type 2s. Exhaustion of local trend. Ultimate trend identification, we talked about that. Type 1 divergence, I don't have time. Let's go next. Okay. Thanks, Rob. Continuation of local trend. Now, this is the room favorite, and you'll see why. It tends to go with price. Like we'll show you some examples where the market comes down and we have little short reverses or not even that, and continues. It's not like we get a big dip and then, you know, we run up for a bit. We're looking for an exhaustion just at a lower structure point than that one. Okay, we roll over again, and you'll see on a chart in a minute. But trading with momentum can be the most exciting and rewarding way to trade. We all like that. Everybody likes that. Man, I want to get in a trade and it just boom. So don't we want to get in don't we want to get in a move and then it go bam with our order, with our interest? Sure we do. So trading with momentum helps us accomplish this. And we have quite a few actually, and we've discovered 2 more this week that we're working on that may be better than anything I have to offer, but they're not worked up yet. So we have a trade we lovingly call the spaceship. And the reason I call it a spaceship is because it's a green bar on a green background with a green smart price band and TTOA in a certain place and needle by, you know, and it's just like by the time we mention all that, let's just say, hey, we got a spaceship coming up. A spaceship is it's a trader trap. And I want to show you these. If you've never seen that, you'll be happy that you saw it. It's a trader trap rocket on steroids. And this is the only anyway, I've got 2 more signals and we're going to be through. So the spaceship will be, let me do this. Let me go ahead and then we'll go over both the spaceship and a pivot retag with a rocket on one chart. So we have we break down, we come up, we want it to run out of steam and go. Or we want to break down, run out of steam and go and start building momentum, but not too fast, and give me a place to get in and don't run off and leave me, but don't chop me. And all of the things we do as traders. So what if we could find areas of market structure that would allow us to trade from the edges, and use increasing momentum that would supply energy and size to our entries? Now, this has been my goal since, 6 months into the deal. I want to combine 2 or 3 great trading concepts into one market entry signal. We have several signals we call super signals. Pivot retag with a rocket is one, and you'll look at the results and you'll understand why. Here's how we use this. We're going to test and confirm market turns. And test and confirm market turns, but we're also going to trade with momentum. Okay, so we'll look at this concept. And here we have the continuation trade called a spaceship. Okay, A rocket is simply a trap trader oscillator in advanced reversal bar with trapped traders on the wrong side of order flow. So TTOA is brilliant in reading order flow and inflection points. We can't trade just that because at times it goes up, down, up, down, up, down, up, down. We can't trade just that. But we find a situation where we have TTOA saying, no, 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 we're not going down. And we look and we see an abundance of sell orders here on the wrong side of order flow where they're going to get hammered. And they did. We go over here. You see this? See, to me, this just looked like a rocket. When I first saw this, it was like, man, that looks like a rocket getting ready to take off. Right here. You know, it looked like the jet fuel, we were taking off. So what happens is that the market comes down and traps all of these people, and TTOA tells us, oh yeah, they're hammered, they're hammered. So here's one, here's a rocket going down. Now, here's the key to what we did with this. We changed, we coded, we didn't code, Rob coded a Bloodhound template to where we can have background color on our chart set to the color of smart momentum. Was that any good? Well, it turns red, boom, turns green, boom. Red reversals on a red background, God, they look pretty good. Green reversals on green background, they look pretty good. So it changed our whole trading life, changed everything about what we are, who we are, and what we do. Okay, so what we're looking for with the continuation is simply trap traders on the wrong side of order flow with trend and with momentum. How does that sound? Trends up, Smart Price Band saying trends up, UTIS is saying trends up. So the trend is up. We're trading with order flow, with momentum, with trend. And we're going to get these people that were trying to, I don't know what they're trying to protect here, but that obviously was not a place you would want to do that. And they got bamboozled. So every time you see one of these little things here, you're going, it's probably going to go that way. And then you can use type 2s, you can use all kinds of things. We have put this signal together and tested it, and I'm going to show you what that looks like. And I'm going to show you the best of both worlds. It's called a pivot retag with this trader trap, or the thing we call a rocket. And all a pivot retag is we get a new low and we move 2 or more bars. And I'm not going to go why 2 or more bars, but that's a prerequisite. 2 or more bars. And then we come back into the low extreme and we reverse. We reverse with order flow against trap traders. So now I have structure. I have a turn that's been tested and proven with order flow and momentum going in my favor. Here's why this is critical and why the rocket is everything. So here the market's coming down, 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 down. And it gets in here and it starts fighting. Okay. So what's happening here? Well, there's, you know, these people that got stopped out, you know, are going to get back in, or people that missed it. Johnny and Jill come latelys are going to get in and they start selling this. Okay. We see that. These are delta bars, just a ratio of sells to buys. Okay. They're only critical for us when they're against order flow. And that creates a trap for us that we get to take advantage of 30, 40, 50 times a day if you want to. It's up to you. So anyway, so we have a potential turn. We don't know that yet. But then we retag into this and we hold. Well, that's pretty cool. We have traders that are on the wrong side of order flow and momentum at a turn, at a potential turn, at a potential turn. Well, cool. If I'm wanting to trade long moves from the edge, this is it. This is what you're looking for. And then let's say we don't get this and this breaks out. Cool, that's fine. We'll get this. We'll get this. See this rocket? Boom. These people are getting hammered. Okay, so we can trade from the just from a cycling standpoint from the edge, type 2s. They're brilliant. We can trade continuations with order flow trend and momentum with people trapped on the wrong side of the market for us. Thank you very much. Or we can do both. We can trade pivot retags into structure with large wins. And that's it. There's a spaceship. Super. I mean, you know, how could that's when people look at that and go, that's all there is to it. That's all there is to it. And then here we have a new extreme. The market comes down. We turn on momentum. Momentum says we're headed down. We retag into this 2-bar break with a rocket. These people are hammered, and you can see in a way it goes. So, so what I'm going to do now is I'm going to these three, and I've worked up these 3 signals. The first we looked at was a type 2, and now we have one more confirming thing with type 2, and I'm not gonna go over that. There we go. There we go. Now, what this software does is you can move this for anything, and you can put 4 ticks, 8 ticks, 50 ticks, 5,000 ticks, initial stop loss. You can, you know, we test everything ad infinitum. Okay, so what this is a type 2 diverging signal. This signal right here that has one more filter on it called needle bar confirmation, and that's just price action structure. And it took type 2s from being a really, really good method of entering the market and turned it into this. Now, I'm going to leave this. We're going to be through in 5 minutes. You can see if you trade it for one handle, 1 point, you got 94% win rate. If you trade it for 2 points, you get 94% win rate. So it's not the type of trade that I would trade for 1 point. Let's see what up. Let's go to, we don't want ticks. Let's go to money. Show me the money. And then if we go to 3 points, David Shepard in the room has done some work with 2 versus 3, and he says 3 works real well. So anyway, but what we have here is we look at the internals with this. Our profit factor is 5.49. So that means it's 549% more likely to profit than not profit with this. You could trade it for, you know, 1 for 2 bars. You are 700% likely to be profitable on this entry. Now, when I first started putting all of this together a year or more ago, it took me some weeks to accept the fact that this was real. And the brilliant way the tools read everything, and the way we trade structure and the way we trade momentum and the way we trade trend. This is real. This is real. So anyway, really good signal. Type 2 with needle bar confirmation. And we mark these every chance, every opportunity we get, we're going to put a mark on that. We like to trade that. Okay, the second signal we have, I'm going to just show the spaceship. And again, this is for 3 days, okay? And this is trading one. Let me back this down. This is the way we normally. Now, we're not suggesting you trade 1 for 1, 1 for 2, 1 for 5, okay? Points, not ticks. We're just saying if you are I'm going to go over this in a minute. Let's say you are a super scalper, you know, or let's say you like to get in and out, or let's say you want to get in and you want to get, I want to double my pleasure, double my fun. So we're not saying do this, you can or can't win or whatever. Not everybody in our room, can trade can or wants to trade 3 lots. Okay. So what we're showing here is the different scenarios. If you were to do 1, do 2, do 3, here's something that's pretty cool with this spaceship, because we are trading with color, with trend, with momentum. We actually can reduce this a bit, and not normally. Oh, it did. I was going to say normally doesn't affect profitability. For all you people that want to use close stops, I did that on purpose. You use whatever you want. Rob has figured out this is a pretty good place to be. Okay, so let's see. Let's look at the pivot retag. This was today. We had 9 trades. We had 11 on, no, I'm sorry. I didn't do today. Monday, Tuesday, Wednesday, 11, 7, and 9. Okay. Because we are at the extreme looking for specific setups, we're not going to get 40 of these. But the internals are very, very powerful. And I could take some time. I could, show you. We could work through the chart and we could show you those, and we're not going to do that. On normal days, we might get 5 or 6 of these. On some days, we've gotten as many as 25 with a lot of data, if you want to trade that long and that often. But these percentages are spot on. I've done thousands of trades in this. It's time consuming, and I don't mind putting in the time. And here's one of the things we know. After we get about 30 trades in, we could put 3,000 in and it's not going to change. We know that because we've done that. So there are the 3 market entry signals that that we went over. Can we have our cake and eat it too? Trade from the edges with momentum, pivot retag on color, and then you get trap trader if you want to add that, and we do, and then it's just, you saw the numbers. Now let's talk about signals for a second. Some other things we don't have time to get into. We're doing some work with this, and it's just, we're finding an acceleration point with these that, a lot of times you'll look and then all of a sudden, wham, we're finding that, and we're anticipating that before it happens. So we're having a lot of fun with that. Let me talk about this for a second. We've talked about one concept, momentum, a couple of different exhaustion and accelerating, and then a couple of different ways to use that in the market. We're not a one-trick pony. This is the reality, and this is important. Just bear with me, and yet, if you're still with us, this will help, regardless of your beliefs in trading and what you do. We've all looked at systems, probably even bought stuff, tested it, went to some room for free for a while. And if it was good, they ask you to join. If it was bad, they say, come back tomorrow. And if it was bad again, come back the next day. And when it's good, they ask you to join. And that just seems to be the way the industry is sort of set up. Here's why something that we look at that looks brilliant, we take home and we start using it, and it won't work a bit. Now, here's why. We have certain belief, most of it subconscious. We have certain belief ideas about the market. I think I should get in and out a lot. I think I should get in and protect it real quick, not let it move against me, try to get runaways. That's a very popular way to trade. I think we should use UTIS for range expansion. We're going down, get up here, get a type 2, get a trap trader oscillator too far, saying the market's overvalued in a downtrend, and working it from there. I think I should start with a big position and take winners off as it goes down. I think I should start with a small position and add winners as it goes down. But we have certain beliefs that we think that we hold dear to. Okay. If the system that you're trying to trade doesn't jive with that, and a lot of traders don't know what their belief structure is, believe it or not. I mean, I think they do. But if what you're trying to do doesn't fit with that, you don't trust it, you won't believe in it, and you can't execute it. And so it will fail regardless of how good it is. It's possible, but time consuming, and some say very hard, to change habits, to change your belief structure about trading. In fact, most people, unfortunately, never will. They'll never change what they believe about the markets, regardless of how much success or lack of success they've had. So you can either say, I'm going to take this idea and I'm going to change. 30 days, 45 days, takes a while. And I'm going to change my beliefs, and I'm going to change my habits. I'm going to change everything about what I do. That's hard. Or you can come to Rob's room or my room, and you can say, okay, I want to trade from the edge. All right, buy that. I want to trade with momentum. Buy that. This is green reversal bar going up. I want to add to or take away from. These long wicks are magic. I want to trail it closely. I want to give it room. I want to trade to a new extreme. Whatever you want to do. You don't have to compromise with us. You come in and say, hey, I think I want to do this, or this is what I believe in. This is what I want to do. Okay, here are the entries that will work with that belief system. I mean, it takes a day or two to get comfortable with applying that, because you don't have to change what you believe in. Okay, so that's important. It's very difficult to come in and change. But if we have different strategies to fit different beliefs of traders, it's a piece of cake. Just find the one that fits you, and then you're going to believe in it. And if you believe in it, you're going to trust it. If you trust it, you're going to execute it, et cetera, et cetera, et cetera. All right. So, Rob, I'm done. That's it. This is fun. Our members are happy. So I'm done.
Thanks,
And
Steve.
yeah, no, thank you. And we appreciate everyone giving, I appreciate you giving me your time today.
You bet. Hey, guys, we have some questions in the chat, and I'm not sure if you guys can see those or how it's set up, but we'd had some questions about the bar types and various things while Steve was doing the presentation. And these bars that we use in here, one of the questions was, well, don't the bars happen too fast? There are times that is true, that they go too fast. Years ago, I don't have a link to it, but we had done a lot of research on different bar types and the advantages and disadvantages. One of the important things about the bar types that Steve is showing you on these charts with these patterns, like for example, he was sharing with you what is a pivot retag. A pivot retag is like a mini value area, if you know about market profile. And it's like a revisiting of a prior area of congestion or value, time at price or volume at price. And then it'll go away from there. So Steve was showing you like PRT rocket. Market makes an extension, it comes back to the original point, and then you get that pattern called the rocket, where I call it a flying V. Steve calls it a rocket, where the pressure is sitting underneath and it makes like a Y shape or an inverted Y shape. These are amazing patterns that repeat over and over again. And but if it wasn't for the bars being the way they are, you wouldn't be able to create the pattern classification. So are these things moving quickly? Yes, they are. However, because of the way all this has been put together over the years, the patterns, you know at what price the pattern is going to complete while it's happening. Yeah. And so that gives you time to place the order. It used to be, back when we first started doing this, the markets, would maybe move, 7, 8, 9, 10 handles in the day on the ES. Now, just this morning, A period, the first 30 minutes of the day today, I think it was 46.5 handles. Well, that was a week a few years ago. That was a week. So we're getting a lot more volatility, if you will. And the number of trading opportunities in a day is staggering. It's staggering.
Rob, may I jump in here?
Absolutely.
I'm sorry to interrupt you. Please understand that's we've put a lot of time and effort into how can we find the edge and how can we find a highly reliable edge and how can we trade confidently from that edge. And because of 30 screens of data and things like that, we've shifted a little bit. And that's the reason, is because of the market is giving us spectacular opportunities. And so we went to work for several weeks saying, okay, what are some more customized, that's not the word I'm looking for, but entries, knowing that if I need a super specific entry under normal market conditions, I might get one or two. But with the volatility that we've been having, I probably will get 20 great opportunities. And so we can demand higher quality entries because just simply we're just going to get many more opportunities. So it's much better method of trading because we're demanding precise patterns and we get lots of opportunities throughout the day. So that's the reason that we have started working with momentum more and working with all the patterns where we can get on the edge of structure and anticipate not only going in our favor, but going fairly quickly. And it's been pretty cool. So thanks.
Thanks, Steve. Yeah. So so just finishing that idea up. You can select your spots. It gives you a lot more opportunity. If and there's different ways you slice it or dice it, depending on, to me, it's really a lifestyle choice with it. We've got traders that trade all day long, and we got traders that come in and, get it done and go do other things. So each of those is a evolution in the way that works for you. And, Steve was mentioning before, if you don't trust or understand a system, you're not going to be able to trade it. So it's super important. The way all this is designed is so that you can do it in a way that works for you. But part of that journey involves sequencing. And so one of the first sequences that you learn to master is the difference between the past, present, and the future as it pertains to the trading as it's happening. And so the very nature of the discussion that Steve is giving you is talking about sequences and how these trades set up. First, you get the extension, then you come to the pivot retag, then, is the pressure sticking out the other end? Is it forming a V on the trap trader oscillator like it was showing you earlier? And that's a rocket. And so it's happening well before it happens. Yeah. And that's super important. Yeah. And that's what makes the difference between what we do and a lot of other experiences in trading, where the setup is actually like, you're like, oh, I guess I got a setup on my screen. No, we're doing it before. And there also involves something else in that process, is what we call optimal engagement. You are actively observing the pattern unfolding in live and real time, and that keeps you focused on what it is that you're doing. Because if the system that you're doing doesn't keep you optimally engaged, then what do? You go start messing with your email or your phone or whatever else, and you're like, oh, I missed a trade. Yeah. So all these things that he's describing, there's implicit within it these things that can make it possible for you to be effective. Yeah. And so if these kinds of things that Steve has shown you today make sense for you, and the kinds of ideas that I'm telling you, what the experience of doing it might be like and everything else, then come join Steve in the room and get a taste for this kind of trading. There's nothing else like it. There's nothing else like it. So, all right, guys, that's what I've got for you. Steve, thanks so much for doing this presentation. And thanks, guys, for coming in and sharing your afternoon with us. If you have any questions, support at stockindextradingroom.com, support at stockindextradingroom.com. And you can also contact us through the website, stockindextradingroom.com. Yeah. Okay, guys, thanks again, and we'll see you on the next one.